I'm Kevin Veely, and here's a stock pitch for Ford. Ford is an American automaker. They make personal and commercial cars. They were founded in 1903 and have been publicly traded on the New York Stock Exchange since 1956. In this industry, Ford has some very large competitors, both domestic and foreign. Some domestic examples are General Motors and Chrysler, and some foreign examples are Honda and Toyota. And some of the trends in this industry are better fuel efficiency due to more expensive energy, technology such as phones and Wi-Fi, and urbanization as more people are moving into cities. Two main competitors of Ford are Toyota and General Motors. Here are some ratios used for valuing Ford stock against some major competitors. First is the price to earnings ratio, which shows what the company is able to earn for each dollar that an investor puts in. And here, Ford is the lowest among the three companies, and having a large gap from General Motors, but not far from Toyota. Which means investors have lower earnings per dollar invested for Ford than for the other two. The price-to-book ratio is the relationship between the price of the stock and the book value of the assets. Since Ford has the largest price-to-book ratio, it is the least likely to be undervalued, because a low price-to-book ratio suggests that a stock could be undervalued. The price-to-sales ratio shows how many dollars in sales are generated from each dollar invested. Now, Ford is slightly larger than General Motors in this case, but it's only half the size of Toyota, suggesting that each dollar invested does not make as much in sales revenue for Ford as it does for Toyota. The last ratio is enterprise value to earnings before interest, taxes, depreciation, and amortization. And here, Ford has a much higher ratio than the other two competitors, and a high EV to EBITDA ratio suggests that the stock could be overvalued. Ford stock is currently selling at a price of $15.73, and I did a stock evaluation which weighed discounted cash flow versus the ratios to find a more accurate stock value. And this suggests that the stock is actually worth $14.59, which means that the stock is overvalued by $1.14. This conclusion agrees with what we found in the price to book and EV to EBITDA ratios, that the stock probably isn't undervalued, but it could be overvalued. Even though the stock is overvalued, I recommend that you hold, because it is not overvalued by a lot. Also, over the past month, stock prices for Ford have been going up, and there's no reason to think that they would stop now. So I would recommend that you hold these stocks till it's overvalued by more.